Heath Grossman here for Money Wisdom Question Series. Today's question is, how do tariffs affect the stock market? So, first of all, they don't directly have an effect on the stock market, but can they have an indirect effect on the stock market? Well, sure. So, let's talk a little bit about what a tariff is. Tariff is ultimately a tax on a good, a product that is imported into this country. So let's say we have a company that is importing the product in its entirety, or even maybe a component of that product that is bringing into this country, but then it's going to be manufactured in this country, right? That is going to be a higher cost of doing those things. So that company has the choice of either absorbing the cost of that tariff or passing the cost of that tariff onto the consumer that's buying that product, you and me. And so either of those scenarios are could potentially lessen the profits of that company. If they're having to absorb the cost, that's certainly going to dig into their profits as a company. If they're passing those costs onto the consumer, that consumer might choose not to buy that product, right? So that can dig into the profits of that company. The stock market is ultimately based on the perceived value of these publicly traded companies and their ability to continue to earn profits and employ people also. So if the profits are going down, if they're having to lay people off because their costs are going up, that can have a downward effect on the stock market and the economy as a whole. But ultimately, with what's happening these days, we don't know what's going to happen. So once again, Heath Grossman for Money Wisdom Question Series. Hopefully this was enjoyable and informative to you. If you did enjoy it and like it, please give us a like and pass it along to a friend.